leading investment bank, research firm, and asset management firm in Sub-Saharan Africa, Afrinvest, recently presented its 2013 Nigerian banking sector report. This report is to reflect the activities, performance, and the impact of the Nigerian banking sector on the economy.
The easiest way to launder money is to build houses and give the keys to whoever you are gratifying. So you are going to see excess supply in real estate as long as money laundering becomes more difficult in its traditional form. Till 3 o'clock yesterday afternoon. External reserves, interesting. Here was accretion from January, accretion, and now depletion. There was some stability and then depletion. Still very much in the comfort zone. It covers 11 months of imports.
At the event, giving an overview on the macroeconomic outlook of Nigeria based on performance in the first year and even forecasting to the second year, distinguished and notable economists made incisive presentations on the economy and its performance.
So even from the perspective of the Nigerian Stock Exchange, where data, market data is becoming more and more critical, the things that you are doing in Afrinvest are the things we want to see done.
The events of yesterday, that is the MPC meeting, which left rates primarily unchanged, but dealt with a very profound issue in Nigerian banking, which is the question of public sector deposits. Quite staggering, and it will lead to some very major and fundamental shifts in the financial system.
The sector evolution, we have given them a very good score. Again, having exceeded expectation. However, on the contribution to the real economy, despite all the sterling effort, we feel they are challenged by other factors, external factors, like the fiscal economy, how that works itself, politics at the federal level and at state levels. And those will continue to be challenges they will have to find more creative measures to work on. So here we've put a weak pass and indeed say that the bank will need to stand on this pillar and focus on its new policies in the years ahead. Indeed, if there's a new governor coming in, that will be some of the things they'll have to look at going forward. Thank you, ladies and gentlemen.
The high point of the event was the unveiling of the Nigeria Banking Sector 2013 report by the chairman and the CEO of Afrinvest.
I'd like to unveil this report, year 2013. Government interventions through the central bank, especially in agriculture, is going to really help us to diversify the economy. Generally, when you study economic development, you find that it's always in 3 or 4 phases: agricultural, industrial, and then post-industrial, which is service sector. Unfortunately for Nigeria, over the last 20, 30 years, we decided to Christian ourselves as post-industrial, whereas we are still basically an agricultural economy.
When you find monetary policies that affect the way they are able to run their business, it constructs their ability to provide credit to fund the sector. And even though they need that as well to even improve themselves. The banks in themselves are operating within the economy and trying to exist as a profit-making entity on its own. But then the CBN recognizes the need that it can use its weight as a government banker and the bankers to the banks to create growth. Unfortunately, it hasn't been successful, but the effort made so far has been very brilliant up to now.
Today at the MPC meeting, at the end of the MPC meeting, the CBN kept most of the parameters constant, but noted that the cash reserve ratio for non-private deposits, for government deposits, will now go to 50% from the 12% that it was for all deposits. So that's hence the 38% net increase. We believe that this would have a constraining effect on the capacity of banks to lend money over the near term, because in the short term they certainly have to repackage their asset portfolio, and you'll see some movements in the treasury bill market as people are now trying to make sure their ratios fit into the new guidelines. But near term, certainly availability of funds for lending to the real sector will be constrained, and you could see a trending up an interest rate already, the cost of lending to various businesses.